Hi, I'm Roger Montgomery and welcome to this week's Video Insight, our last for 2023. Today we've got some potentially exciting news for all you small cap stock enthusiasts out there. In this video we'll be discussing the recent developments at the US Federal Reserve and what they mean for small cap stocks. I think 2024 might just be the year of the small cap, so let's dive in. Last week, the US Federal Reserve took an unexpected turn in its policy rhetoric, and it's causing quite a buzz in the market. They're talking about the possibility of 3 rate cuts next year, or a 0.75% reduction in rates. Now, this is significant, especially for small cap investors. As this chart of the US Russell 2000 index shows, and as I've been forecasting for some time, small caps can react very quickly when the narrative becomes positive and sentiment shifts. And as this second long-term chart of the Russell 2000 reveals, there's still plenty of room to grow. I believe this enthusiasm is totally justified. Why, you ask? Well, let me explain. First, small cap stocks, those with a market capitalisation of about $300 million to $2 billion, are known for their high growth potential. They're often in the early stages of their growth cycles, and they're poised to benefit from favourable economic conditions and improving sentiment towards risk. Meanwhile, lower interest rates, which the Federal Reserve uses to stimulate economic growth, are particularly beneficial for small caps. When the Fed cuts rates, it signals a more accommodative business environment. This eventually leads to lower interest expenses for companies borrowing to fund their operations or expansion. Lower costs mean increased profitability and more capital for investment in new projects, technology and workforce expansion. Plus, it eases the cost of living pressure for consumers, leading to increased consumer spending, which directly benefits retailers and other domestically focused businesses. And who benefits most from these shifts? Well, of course, it's small caps. So is it any wonder the Small Ordinaries Index is up 12% already since the end of October? Just last year in November 22, about a year ago, I mentioned that calendar 23 would be a great year for innovative growth companies with pricing power. And I was partly right. The Magnificent Seven mega cap tech companies saw strong gains. But what about the rest of the innovative universe? Well, they were left behind. Many innovative growth companies with pricing power are in the small cap market. And unless we face a deep recession, which I believe is unlikely, the Federal Reserve has set the stage for these small caps to catch up in 2024. The backdrop for our optimistic outlook is the Fed's recognition of declining inflation rates. They've mentioned a cooling of inflationary pressures, which has led to favourable changes in yields on 10-year treasuries. I understand some investors are still going to be cautious, citing concerns about a slowing economy and the risk of a recession. And while I won't predict a recession, I think a technical recession, which is 2 quarters of negative growth, is a more likely outcome than the sort of deep one that we saw in the early 90s, with 11% unemployment and every third shop boarded up and closed down. And here's something to remember. Small cap stocks often shine after recessions or during economic recoveries. They're agile, adaptable, and can capitalise on economic upturns quickly. As the economy moves away from higher inflation and interest rates, I believe small caps will lead the stock market recovery and play catch up to those Magnificent Seven mega caps. The resultant gap will spur investors to start scanning for opportunities among smaller capitalisation stocks. Lastly, let's talk a little bit about relative value. The PE ratio for the S&P 600 small cap index is at 13.2, which is marginally above its lowest levels since the beginning of this century. This is a big deal. Historically, when the PE was low, it was accompanied by either surging interest rates and inflation or the recessions of the GFC and the pandemic. Right now, the economic and interest rate outlook, along with historically low valuations, makes small caps look relatively promising, if not very promising. In conclusion, the Fed Reserve's move toward rate cuts next year is a game changer for small caps. They'll benefit from lower borrowing costs, economic recovery, and relative value. 2024 could very well be the year of the small cap. So if you're looking for growth opportunities, think about investing in small caps or in small cap funds. And that's all we've got time for this year. I want to wish you all a very merry, safe, happy and peaceful Christmas. May God bless you and your family. Merry Christmas, and we'll see you in 2024.